Yes, good morning. This is Andrew from My Investor's Place. My Investor's Place is a social network site. I hope you join us where you can post your blog, ask questions in a forum, all these pertinent issues that are about the economy and everything that we're going through. What I want to talk about right now is the 2008 economic debacle. This is a debacle. And I'm going to just give you some exact facts just to put everything into context. Let's start with the fact that the median U.S. income last year was about $50,000. And now let's put the next fact in here, that the plan of Treasury Secretary Henry Paulson's $700 billion plan to stabilize the banking system, that what's going to happen is that every man, woman, and child in the U.S. will end up owing $37,000 each. Let's put this into simple context, or another way. Approximately 73% of the median income will be needed for this plan. It's quite obvious that we're going to be paying this for a long time, and quite obviously our grandchildren also. Henry Paulson's plan may pass the national debt to the highest level since 1954. And there's a lot of implications here. Possibly, and I'm going to say possibly because anything can happen, that we'll see diminished demand from foreigners for U.S. bonds as well as possibly other U.S. assets. I mean, really, why would foreigners want to be attracted to U.S. assets? I have a worse question. Why would U.S. investors still be attracted to U.S. assets? It's pretty clear, at least to me and other pundits, that the $700 billion plan can cause a jump in interest rates prompted by the glut of additional treasury bonds needed to finance this plan, so the printing presses will run. Needless to say, the dollar has been weakening against the euro and many other currencies. So how can this be a good way to get out of our current economic debacle? I'll put it another way, that Paulson's plan could drive the debt above 70% of GDP and the annual budget gap to an all-time high, exceeding $1 trillion. Okay, but the good news is, if you want to take it that way, the U.S. isn't the only one to this party. You can look at some other developed nations that have debt levels far higher than the U.S., such as Japan. It's 196% of GDP, or Italy's 104% of GDP. I mean, where does it end? And that's just a simple question. If we ran our personal businesses, or forget that, how about how my wife would run our household in this manner? Who's going to bail us out? It's ridiculous. And then the irony is, I read a statement, I think it was in Bloomberg, that Paulson said, it's difficult to determine what the ultimate cost of the plan will be. Though he said the objective is to minimize the cost to taxpayers. Hello, what don't I understand? I'll give you the next one. Supposedly the plan for Paulson is to buy assets at prices that are depressed. But no one knows what the Treasury is going to pay for these prices. That's another unknown. Put everything in its fair context. Is it possible that if the Treasury buys these assets, that they can increase in value after the credit crisis is ended? Can the Fed make money doing this? Will the taxpayer ultimately profit? Your guess is as good as mine, but I'm going to give you a funny point. Not really funny, but a true point, that when Chrysler was bailed out in the 80s, the taxpayers did make a profit. Again, I don't know. No one knows. I invite you to come to myinvestorsplace.com. It's a social network site for investors that we can chat, we can discuss, we can learn together, post your blogs, get some exposure. Please join us, www.myinvestorsplace.com. Thank you.